MTN's 22% rise in first half earnings was helped by a weak rand, which offset weakness in its core markets, South Africa and Nigeria. But pricing pressure is evident. The group's price per minute has halved from a year ago. In South Africa, MTN was slow to respond to aggressive competition, resulting in its subscriber base dropping by 400,000 to 25 million. CNBC Africa's Samantha Loring asked MTN CEO Sifiso Dabengwa if that company was caught off guard.
No, not really. I mean, the issue is it's a question of the different strategies of different operators. There are those who firmly believe that by being aggressive on price, they will gain market share and at some stage, be able to deliver good returns. We don't really think that's a strategy that really works long term. And also in terms of sustainability of not just the company itself, but the industry as a whole. Mm-hmm. So, yes, to a certain extent, I don't think it's a question of being caught off guard, but it's just a question of maybe not understanding clearly what the strategies of these operators would be in terms of their long-term views.
That being said, South Africa clearly was an area that was under pressure during the region. Period. Margins down 2.1% here. So what is your outlook now for South African margins, given the fact that you do highlight that there's been a structural shift in the pricing environment?
I think the key issue for us now is managing our costs. That is the fundamental priority. How well we will be able to get back to, let's say, our margins where we were last year is going to be a function of how well and how quickly we are able to address the cost structures to reflect where the pricing structures are.
Mm-hmm. So when we look at cost structures, where are the obvious areas that you're focusing attention on?
You look across the board. You look across the board. Right from services that we acquire from external service providers, how we manage our own activities internally. We have to focus on optimizing on all aspects of our business.
Mm-hmm. Let's turn our attention to Nigeria. Your EBITDA margin, or EBITDA there, was down by 8%, and then EBITDA margin sitting at 56.5%. As always, a very key area for MTN. But that being said, you have been in focus given regulatory issues, the regulator putting you under pressure to reduce tariffs. So there has been that shift towards flat tariffs across the board. But then at the same time, you've also had competitors who've been forced to increase their tariffs. Mm-hmm. So as it stands right now, what's the price differential on average between you and competitors?
We probably have a premium probably of no more than 10%. The challenge with the pricing structures is that there's so much promotions in the market that it's very difficult to say. But clearly, our offerings are competitive, as we've seen from very good subscriber growth. We've seen our upward revenue trends on a month-by-month basis. So with our continued investment, we're now in a much better position in the sense that we are able to keep the minutes on our network, and therefore we expect that we will continue to see revenue growth as we had indicated earlier on in the year and late last year.
Mm-hmm. And on the departure of CFO Nazir Patel, KPMG still investigating exactly what happened there, but what was uncovered recently?
Well, like I indicated, I think the issue has been one of governance in relation to some specific transactions. And KPMG is still working on it, and they will report back to the board in the next 2 to 3 weeks.
Mm-hmm. And just looking forward for MTN right now, because I suppose one of the analysts did point out that you're spending a lot of money, Nigeria, South Africa, in terms of capital expenditure. You've still highlighted 27 billion rand is the full year capex expenditure you're looking at right now. You've had pressure in your key markets. Iran, you're still trying to repatriate those funds, and that operating profit line is flat right now. Are you looking at a strong return to growth, or what are you looking at in terms of the future of earnings?
Look, I think we will still continue to see growth in earnings. I think from a pricing point of view, our view at this stage is that the pricing pressure is probably bottomed out. We don't see much opportunity for further price erosion. And as we've seen in some markets, there is pressure as the other operators start feeling the financial consequences of significant price reductions. And as you say, at the end of the day, the amount of capex and infrastructure you build is what determines the sustainability of your business. And that infrastructure still needs to deliver returns to investors. So we think that the opportunity going forward is still there to continue to grow earnings.
Mm-hmm. So we look 5 years down the line, where do you see as the new revenue generators for MTN as data revenues or data growth and prices continue to come down and voice prices continue to come down?
The key issue is with the services that are going to be driving the data traffic. I mean, at the extreme end, you've got video streaming as a key opportunity for driving data revenues, but it's going to be important to provide the services to drive data revenue, but then also the services must be such that people are willing to pay for those services.